startling footage we're about to show you was photographed by a 42-year-old, Romero Valadares. This video was taken yesterday afternoon at his son's 7th birthday in the city of Passo Fundo, Brazil. It was sent to the local news bureau there and sent to us via satellite just a few minutes ago. All initial opinions are this is genuine. What you're about to see may disturb you.
Move, children! Vámonos!
And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Yes, we are a stone's throw away from Malibu. And yes, I am wearing a shirt that is my rally shirt. I am looking to kind of celebrate these markets as things are about to unfold and are unfolding, as we've been talking about on this channel for some time. And today's video is going to be a little bit of different tune to it, as we're going to talk about the Shemitah, the stock market crash. We're going to talk about the housing crash that's happening. And we're going to talk about the dollar having a blue sky breakout as we have just hit some major targets. So I got a lot of comments and questions about the Shemitah. Unfortunately, I'm not a Jewish scholar. However, I did look up the definition here, and I found this kind of interesting. And instead of looking at Wikipedia, which is now, bought out by the Biden administration, I wanted to go ahead and talk about, or I went to myjewishlearning.com, and here we go. So, cycles of time are central to the Jewish life. Just like Shabbat punctuates the last week, so too the holidays punctuate the year. Less known, but no less central to the Jewish cycle of time is the Shemitah, the year of release, which is more widely known as the sabbatical year. The next Shemitah falls in the Jewish year 5782, which began September 7th, 2021. So just as the Torah calls for the Jews to work 6 days and rest on the seventh, it calls for them to work the land 6 days, let it rest in the seventh. After 49 years, 7 cycles of 7, the 50th is the Yovel, the Jubilee year. However, the Jubilee year has not been marked for centuries. In the Shemitah year, debts are forgiven. Agricultural lands to follow private land holdings to become open to the commons, and staples such as food and perennial harvest to be freely redistributed and accessible to all. Wonder if there's some redistribution going on right now. The first reference to the Shemitah in the book of Exodus, one of my favorite books. For 6 years you are to sow your land and to gather in its produce, but in the 7th you are to let it go, and I'm not even going to try and pronounce that. And to let it be, that the needy of your people may eat, and what remains, the wildlife of the field shall eat. Do thus with your vineyard, with your olive grove. Shemitah is further discussed in the Mishnah and the Talmud, particularly in Seder Zeriam, the section pertaining to agricultural laws of Israel, in the 11th century, Maimonides further elaborated on on the laws in his masterwork, something about the Torah, which includes a section addressing Shemitah both from an agrarian and economic perspective. Anyways, I'm not going to read the whole thing here, but Shemitah continues to be a very real part of the religious, agricultural, and economic reality in Israel today, and one that is simultaneously both very exciting and very challenging. Anyways, so let's take a look at what the Shemitah means in the charts, right? The patterns. We've had these 7-year cycles going back to 1973, which is 50 years ago. And, well, it's a little too much of a coincidence not to bring this up to your attention. Again, this is a pattern of descent, which has been happening every 7 years. So what I'm going to cover is, some of the huge bubbles. The 1973 bubble. I'm going to talk about the dot-com bubble. And I'd say we're very, very similar to the dot-com bubble right now. So, and there is great symmetry in the charts. And so let's go back to 1973 first, and then we'll take a look at the dot-com bubble and see what we can gather here. So what are you looking at on the chart here? What you're looking at on the chart is these moving averages here. That is a purple 200 exponential, that is a 200 simple, and the blue 377 exponential moving average. And I'm going to try to blow this up as much as I can. But here's what you will notice is that basically the first time, and this was the peak here, January 73. So was this Shemitah in September? And, I don't know everything about this Shemitah thing, but I do know is that it's showing up in the charts. And apparently the Shemitah started last year, September of 23, and it ends right now on the 24th, which is going to be this weekend. Today's the 23rd, so the 24th is tomorrow. And I had been telling people, watch out, look in the markets, what's going to happen around this time of year. And does it mean the market goes straight down? No. I don't know if that's the case. But here's what I would say is there's some odd similarities, right? So the first thing is you see the descent begin, call it the end of the Shemitah. September would have been over here, but close enough is close enough. Needless to say, we come down to the purple 200 and we approach it once, get a bounce up to the 0.5, get rejected, get a bounce again off the purple 200, and we come up to the 382, which is where your classic bull trap begins. And essentially, as soon as you lose the white 200 simple, you really begin to descent, and we come back test it one time, and then you get the real move down. And I'm using this Fibonacci tool on a bearish retracement from the all-time high to the low, to the swing low, okay? And what you'll see here is that the 1618 does not hold, it bounces off the 1618, and then we descend down to the 2618. And this exact pattern actually holds true through these last few bubbles. So let's go back to the 2008, the dot-com bubble first. Same exact pattern. So we go from the ultimate high. This is going to let me drag. I locked it on the chart. So let's go ultimate high. March of 2000. This was August. Here would have been September. So, again, close enough is close enough. First thing, we come down to the purple 200. We actually shot through it, but we did get a small bounce. And the swing low here, I mean, we got a weak bounce, right? This is known as a weak bounce on a bearish retracement up to the 618. Weak bounce gets rejected. And then as soon as you lose that white 200 simple, okay, game on to the downside. We got one back test, call it a back test. It kind of overshot the 200. And then the real descent happens. And then where do we land? At the 2618 fib, called the market bottom. How long did it take to get there? So that is August of 2000 to October 2002. So call it a year and a half or 2 years, excuse me. All right. So that was the dot-com bubble. Here is the 2008 financial crisis. And again, what do we have here? This one actually happened in September. The all-time high was in September. We come back down. The swing low right here. So this is a bearish retracement from the high to the low. We get a test of the 382, very similar to 1973. Get rejected. As soon as we lose the white 200 simple, that is your last hope for glory. Well, we lost it there for a moment there on the week. This is on the weekly time frame. And so we broke it. We retested and then shot down. What do you know? The bottom came in. Close enough is close enough at the 2618 fib. So the question is, where are we right now? Where are we right now? Well, this is January 22, September. So I believe September of 21 is when the Shemitah started back here. And so that does line up, with kind of the year going into it. You kind of get this first incline and then descending down. And where are we at right now? Well, we got the bounce off the purple 200. We came up to the 382. We rejected. And so what would I suspect price action to do something like this? And by the way, I have this green box here, call it the green box of peace and prosperity or death and despair, right? If we bounce off this region, peace and prosperity. If we go below it, I think it's going to get a lot worse. But this actually, and I just noticed this today, the 2618 fib actually comes all the way down to really our 2016 lows, which I believe that was the last time the Fed attempted to raise rates, right? So they called it the temper tantrum or something like that, the temper tantrum. Needless to say, here's what I would suspect price action to do, something like this. We probably get a bounce off this area, to be honest, and where could bounces come in? Again, using our fib tool. Oh, I wanted to draw the price action first. Dang it. Let's erase that. That's not what I wanted. Okay. Here we go. Delete. And then I want to move this just to show you where a bounce could come in play. And a lot of people think the market's going to bounce from this level. With the way the dollar is skyrocketing now, I wouldn't be surprised if we shoot right through it personally. But what I wanted to bring up here is that where do those bounces come in? If we do get a bounce off of this level, off, let's say, the 200 simple, which I wouldn't be surprised if we get down there today on the S&P 500. Again, that's what we're looking at. Bounces come up, weak bounces to the 618 and bull traps right here at the 382. So some people are wondering, well, what can I do? You sell the lower high. Again, not financial advice. I'm not a financial advisor, but might be your last chance for glory. So, anywhere, I'd say a 5% bounce. That's 7%. Between 7 and 12%, we could get a little bounce if the dollar will turn around here. And I imagine it will pull back after this massive girthy green candle that we're looking at, but I'll get into that in just a second. I do imagine we do probably get a bounce off this region. So what could price action look like if we shoot through, if we had a closure below here? Easily, I think we could retest these lows at 3,200. But very, very likely we're going to have the retest of that white 200 simple. So what could happen here is let's say we shoot through. We come back up and retest and maybe create a little range here, create some hope, and then what happens? Eventually we come down here, which is that 1618, excuse me, that's the 236 off the bounce, but the real, you want to go from swing low to swing high, which if we took it from this swing low to that swing high, I don't know if I would consider that a clear stop and reverse point. Some could, so let's just see. Yeah, I would definitely say we get a bounce off this region first before descending further. So, and again, this may do something like, again, this is just hocus pocus guessing here, but if we are going to look at patterns as relevant, look at the Shemitah year, we're going to look at all this stuff and say, hey, let's get some kind of idea where price action is going to go as the real estate market is just about to crash. The real estate market is 6 months behind the stock market, right? Stocks are already down, how much from the high? You're down 23% from the high on the S&P. And however, you're still up significantly from the low of 2019, right? So you're still on the NASDAQ up 46% from the low in January 2019. So again, the pain has not been felt in the market yet. I do believe that this area, they added 50% of all the money in the history of the world at this point. Right here, 50% in just a few months, right? That's a lot of money. That's not realistic growth. It's not based on anything but funny money, not based off of earnings, not based off of GDP. And how are stocks supposed to grow faster than earnings, right? How are stocks supposed to grow faster than GDP? They can't. It's just not realistic. It's not real growth. And that's why the guy from Guggenheim, Scott Menard's talking about a 20% decline. Jeremy Grantham, he's talking about another massive wipeout. Some of the real money managers in the world, they're saying, you know what? I don't think I'm going to believe the guys on Bloomberg that are saying, yeah, just buy quality stocks now, buy the dip, buy quality, buy quality. Let me explain something to you guys that I'm very confident in, is that anything you buy right now, it will be cheaper next year. Bitcoin, stocks, gold. The only thing that might not be cheaper next year are your bonds, right? And we talked about this yesterday. Bond yields were skyrocketing, pulling back a little bit today. So the U.S. 10-year is down 1%. Look at that. The 20 is rallying, and the 30 is rallying as well. In a bit of a breakout, and we did say, hey, look, the 30-year probably coming up to 4%. The 2-year is probably going to head up to 5% at a minimum. And that is not good for equities, right? It's a flight to safety, and looks like this one is, if we get any kind of a closure above 427, that's going to come up to 5.25 on the 10-year. So something to note is the 10, 20, and the 30, right? They should be, cheaper in a sense. As the 10-year bonds rate should be higher than the 30-year. Right now, they're at about the same. 3.68 and 3.6. So why would you buy a 10-year when you get a 30-year at the same rate? It doesn't make sense. Needless to say. Flight to safety, the bond market is showing that, and so is the dollar. And this one, I will kind of toot my own horn here and say, hey, look, we talked about this a few days ago. Very, very likely the uptrend would continue. And what was I talking about? Well, I was talking about this 4-hour consolidation. We were in here for a few days. As soon as we had a break above this guy, I said, look, here is a bull flag. And in fact, what happened? We nailed that bull flag target. Oh, finally pulling back here on the 4-hour time frame. Let's see what our other indicators. We're maxed out here. Stokes are still up. We're in the bullish control zone. And the only bit of bearish divergence is coming all the way back from this point right here. So could this move still have some legs? I imagine we're getting a bit overheated. The day is still ascending here like a rocket. So volatility is increasing. Would I suspect this one to stop? Where would I suspect this one to stop? And, you know, start to get a little bearish on the dollar. Well, we have our macro target here of, I'm going to put my other regular chart on. Volatility increasing on the monthly. We're going to close in 7 days and 4 hours. So we got 7 days left on the month. Something to keep in mind. And why am I looking at the monthly? Well, we've been calling this one out for some time, saying, look, this was a macro breakout on the US dollar. The monthly time frame is a very powerful time frame, and our first target, which was just nailed, shot right through. And typically when you break through the 1618, your next target is going to be the 2618, which is coming in at $1.24. So I am just going to put our target up there for the US dollar. Did not know it was going to happen in a couple of weeks. But we are taking out the 2020 lows, and I would say we probably get a stop at about 120. If that breaks, whoa. You know, this was the dollar in 1985, back when we had some strength after Paul Volcker, right? Paul Volcker raised interest rates up to, 15%. Just imagine trying to buy a house at 15%. And again, that Taylor rule, what the government talks about, the Fed talks about, you can't fight inflation unless interest rates are higher than inflation. So something to keep in the back of your mind here with the CPI coming out last week, hotter than expected. Okay, so bringing us back to Bitcoin, and what does this all mean for Bitcoin's price? Now, as we've explained many times on our channel, when the dollar has strength, risk assets become weak. And risk assets are the things in the stock market like the NASDAQ and the S&P. And whatever they do, they're the generals of the market. They go down, bet you the Russell and everything else is going to go down. And no wonder Michael Burry sold all his stock, the guy from the movie called The Big Short, right? He sold all of his stock except for one, a prison in Florida. And I always laugh about it and say, oh, they're probably going to try and lock up all the Democrats, right? Not. But that's what's going on with stocks and dollar, housing market. I mean, just be prepared. When interest rates go up, you can't buy as big of a house. Prices will have to come down. Inventories going to have to go up. And even Powell himself said the real estate market needs to take a correction. A correction means 20% minimum in the real estate market. All right, I'm going to get back onto Bitcoin and just I'll continue to go over what we've been going over and talk about my ideas for Bitcoin's price action. This is a weekly time frame, and we're going to close the week on CMEs today. So where's my CMEs? Where are my CMEs? So the symbol for this one is BTC1 exclamation. I don't know. Oh, there it is. And here's what we said on CMEs. Look at this massive descending triangle. any kind of a closure below this wick here, probably going to be good enough to do it for me. I mean, really, you'd want to take out this wick at 18,345. Are we going to get that in the next hour and 33 minutes? Oddly enough, right? NASDAQ is down like this today. And we've been calling this one, said we're going to get down to the 200. NASDAQ is down majorly, 2%. Bitcoin is only down 3.6%. So I would have expected a bit more of a bleed out today on Bitcoin. Maybe people are going to wake up over the weekend and then begin to dump. I don't know. But Bitcoin and Ethereum are holding up relatively well in comparison to, I mean, even Amazon's down 3.4%. Tesla's down 5%. Where's Microsoft? Microsoft down 1.6%. Just curious, what does Microsoft look like? It's heading down to the purple 200 at 222. Gold, we've been talking about this one. And we did say, hey, look, with this closure below this wick on gold, you know, this is a 2-year range, or whenever this was, going back to 2020. Yeah, 2-year range just broke down, and I probably need to, gold is getting hammered. And where do we get the 1450 target? Again, using those Fibonacci's. It's a real easy Fibonacci retracement here. And, you know, I imagine somewhere in this area that gold heads as the dollar heads up to, if the dollar hits 120, bet your butt, gold comes down to 1450. And silver, we already pointed this one out. Silver kind of already hitting its target here, but does she have some more to go? Maybe we should use the wicks. And are we looking at the right time frame for silver? Silver just tends, you know, to get more volatile than gold. So, you know, silver does whatever gold does, but more, right? So I wouldn't be surprised to see really silver just do this full retracement. But, you know, 17 bucks is in the wind. And let's look at the volume profile and see if we get any other ideas. So we clearly have lost the point of control on the volume profile here. These guys, this shows all the buying and selling for a particular time frame. And we're well below the point of control. And next stop down, 15 bucks. If $15 gets lost, you can see there's really nothing holding it back from revisiting the $12 target. And that I do think is a little more realistic. Just curious, from this low in 2008. And notice, you know, a lot of people have this idea that gold and silver go up when the stock market goes down, and it's just not the case. Silver dropped from $20 to $9 in less than 30 days when the stock market crashed in 2008. So just a little side note here, but if we were using fibs, you can see that we came up to the high, got below the 0.5. That tells you, hey, we're going back down, and came back up, tested the 0.5, could not break it. That's the 50% retracement. And what is typically going to happen once you lose this level at $17, $17.69, yes, you typically have a 100% retracement, which is going to bring you down to 865 on silver. So, you know, don't hate me. This is just what the chart says, and I'm not a financial advisor. I am just showing you what I am looking at from a technical perspective. Okay, what else do I want to bring up? So we took a look at Bitcoin on the weekly time frame, and I'll just point this out as well. You know, as long as we're in a weekly downtrend, you expect Bitcoin to be going down. This is the descent pattern on Bitcoin, which September 21 was right here, and the peak coming in November 21. But if you count 11 bars down, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So exactly 11 bars down from the high, you put in a low, a swing low, and then 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 gets you the next high, roughly a 40% bounce. And then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Oh, what do you know? Your next low. And 9 more bars. 1, 2, 3, 4, 5, 6, 7, 8, 9. There's your high. And what do we got next? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, I got to move this thing one more over. October 31st, potentially the low to get put in. And then 9 bars from there. 1, 2, 3, 4, 5, 6, 7, 8, 9. So one more over. I'm going to count that again. January 1st. So why do I have these areas marked off? Well, we could very, very likely come down to about 10,000 bucks, put in a bounce of 40 or 50%, maybe up to 15,000. And then I'm going to judge the market from there to see what is actually happening, because I do not have a crystal ball. I'm just using TA to get some general ideas on what the market is going to do. And I do suspect here Bitcoin could possibly do something like that if the pattern holds true. And as long as we remain below, now I'm going to say, you know, still below 25,000 bucks on the weekly time frame. What else do we have in our favor today? The week closing on the CMEs. Let's see if we are still crossed down. CMEs. Stokes are crossed down. Volatility is just getting above 20 percentile. And it looks like we are going to break the range. Okay. That is CMEs closing here in another hour and 26 minutes. What else do we have? The 2-day time frame will cross down on Monday, any kind of a closure below 20,500 on Monday. So very likely Stokes will cross back down there. And we've went over it several times. We've gone over it several times. What is the average move down on the 2-day time frame? When we cross down, volatility is expanding. The average move is about 32%. Let me see my notes. Yeah. Average move is actually on CME is about 39% for the 2-day time frame. So let's go back to CMEs and take a look. If we cross down on Monday, or sorry, it wouldn't be till, Monday, 3 days, 2 hours. So let's call it Monday, 39% down from where we're at right now. That would be the average move. Oh, yeah, I already have it marked off pretty much at 11,500 for the 2-day time frame, and the 5-day is still down. Volatility is increasing, so I imagine the weekly does the same. What about the 2-week? 2-week is going to cross down today anywhere below 20,123. I don't have any backdating on that one, but I do know that is not a good thing, typically not a good thing. And we will close a bearish engulfing candle on the 2-week time frame, which implies immediate continuation to the downside with any kind of a closure below 18,521. Okay, we're 32 minutes into this video. I think I've done enough. If you did enjoy the video, please drop a like, subscribe if you haven't already subscribed, and post a comment below if you got a question. We have a free link in the description below where you can set up TradingView and start tracking the market with us. All right. Look forward to seeing you guys again. Take care and have a blessed day.